All right, hello everyone. Welcome to there's a little confusion about the episode number, but I believe it's episode number 86 with going live with Good Soil. Um, Matt and I here are again broadcasting this live on our YouTube channel, Good Soil Investment, as well as on Twitter Spaces as usual. So, disclaimer quickly, sometimes we forget to put this in verbally in the Twitter Spaces, but none of this is investment advice, just our own opinions on things. But we're here to talk about, the macro market, Tesla, a couple other stocks we cover. We'll talk about Roblox and Lemonade, all things Elon Musk, Twitter, and take some Q&A the last 15 or 20 minutes or so. So, Matt, how's it going? Last week you did this with Farzad. I listened to it afterwards. I was away for the week, but you guys did a great job. Appreciate Farzad stepping in as always. And how'd it go? Did he make fun of you too much, or did you guys get along okay, or what?
Yeah, I think it was equal opportunity making fun of each other.
Okay.
It was kind of funny actually because he said that he canceled on me, and then I got Yashu, and then Yashu canceled on me, but Farzad like freed back up. So it was kind of funny because Dan Ives canceled on him. So it was just like this circle of
Oh,
people canceling on each other, and we were left with two disappointments at the end. But no, we gave each other a hard time, but all in good fun, obviously. And I think it was a good conversation. He's got such an interesting perspective. I think he's got just a different point of view than you do or that I do, and I think it's just kind of
yeah.
interesting to hear where he's coming from.
Yeah, and I really like that Farzad's really gotten onto Elon Musk's radar as of late. I'm sure you've
Yeah,
noticed, and many people here, Elon seems to like or reply to lots of his tweets now, which is great. So yeah, it's great to have one of us in the, Tesla, another one of us in the Tesla YouTube community for Elon to interact with, and it's just nice to see. So anyway,
yeah. I think many of us have had the kind of one-off replies from Elon here or there, but it seems like Farzad's becoming a regular kind of like Pranay Pratthole or
yeah.
Viv used to be. So it's nice
Yeah.
to see that
Well,
he's
you
been
heard
that
the
kind
story
of
about the
regular.
guy Pranay Pratthole, right? Did you hear
Yeah,
this?
yeah.
That
Where
was
he like
crazy.
was
He was
just
just like copying things
stealing
from Reddit.
everybody's. Yeah,
Yeah,
it
and putting it
was
on there. I think
that
Elon caught
was
on to that and
crazy.
then stopped replying to him or something. It was very odd. Yeah. Anyway, Elon has his own like Twitter lists he uses. I think he's commented on lists being good. So Farzad's clearly on one of his lists he's following. I think he doesn't follow Farzad technically, I don't think, but Elon has these lists he looks at, whether it's Scott Adams, Farzad, whoever's the
Yeah.
latest people on his list. So that's good. So let's go on to our usual programming here. So macro market, that's what we start out with before we go into Tesla stuff. Big investor day tomorrow. We've got a lot to cover on that. So let's try to touch on the macro market not too long. We got a hard cutoff today at 10:30. So we started a little bit earlier than usual, so we can try to cover everything. So the macro market, I guess, what was it on Monday? Yesterday, the personal consumption
I think
expenditure
that was Friday, but
or
yeah.
Friday, yeah, the indicated
Yeah.
that's when the market crashed a little bit on Friday. Yeah, that's right. So it was just a not good indicator for inflation, right? It's just more of the same for January metrics, similar to what the CPI
Yeah.
did, right?
Yeah, similar to CPI, and the PPI numbers came in a little hotter than expected, and these PCE numbers were coming in a little hotter than expected, which is the personal consumption expenditure. So there's been, I think it was the December numbers looked pretty good, and so we were kind of expecting, at least I was expecting a continuation of that kind of trend of really muted inflation expectations. But
Mhm.
it's remaining. I tweeted something like it's like a zombie. It just is not dying. As
Yeah,
seems like we've killed it, and then it just resurrects and keeps trying to bite our face off. So
yeah,
yeah, I do still think that this is mostly supply related. This is something we've been talking about for probably over a year now.
hmm
But it doesn't seem reasonable to me with what's going on in the commodity cycles and everything like that this really is going to be sticky. But I'm
yeah.
surprised at how durable this inflation has been. And I
Yeah,
think you're in the
commodity
same camp,
prices have
right?
come down. Yeah, I am. Commodity prices have come down drastically. Even I've seen reports just coming on the last couple of days showing apartments, rents are coming down drastically now. But
Mhm.
we know how that owner equivalent rent takes a huge delay to catch up to whatever the latest,
Yeah.
CPI numbers
Well,
are. So there could be a
the good
delay in the
news.
inflation reporting coming down before we really see it. What were you
The
saying, Matt?
good, I was going to say that the good news though is the way that the CPI is calculated. There's like the rents, which is pretty much up to date, and then the thing that has the big lag is the owner equivalent rent, which is if you own your house, what would you essentially rent it out for? That's where there's this. I think it's a 12-month lag essentially because they're doing like 1/12 updates every reporting period.
Mhm.
But the rents, like if rents next month came down 10% or something like that, I believe that would be an immediate. That would show up immediately in the CPI
Okay.
data. So I think the
Well,
fact
hopefully
that
it
we're
does.
starting to see signs that rents are coming down, that could actually have a meaningful impact on CPI numbers.
Yeah. And then Kathy Wood made a big appearance. I mean, I think the market's a little spooked because the reason, it's crashing on Friday and not resilient like it was earlier in January. It's kind of correcting back down a little bit since January through the month of February. And it is because, the market's expecting the Fed to be a little more aggressive in raising rates and keeping them higher for longer because inflation data is not going away as fast as was thought in January, based on the December numbers. So now
Mhm.
February, the January numbers all came in a little higher than expected. So, 50 basis point hike in March. The March meeting in a few weeks is, I think, a 33% chance now was the latest I saw according to Fed futures. It was like a 10% chance, recently. So it's been creeping up. So and the terminal rate might not just be 5.25 or 5.5. It might be 6% or something like that, and that would kind of, I think, push the market a little further if the terminal rate, which is like the rate the Fed is going to push to the highest amount before it kind of pauses. If that's 6% or above, I think my opinion is the markets, the growth tech stocks have a nice correction to coming if that's the case. So I think that's the main idea of why we're talking about the macro market, right, Matt?
Yeah, and we saw just this. I think it was just yesterday. It might have been Bank of America said that they expected the first rate cut to be in March of next year instead of December of this year now too. So you're
Yeah.
starting to see, maybe the rates will be higher longer, kind of like what Jay Powell was saying. I don't know, 3 or 4 months ago. I think the market was discounting that at first, and now it seems like they're kind of catching up to it and saying, all right, yeah, we kind of buy that. But it's
Mhm.
interesting. You maybe would have expected a sharper kind of drawdown than we saw if the market was truly expecting,
Yeah.
inflation to be more sticky. So to me, it doesn't seem like the market's completely thinking that this is going to be such bad
Yeah.
news.
Yeah, I don't think so. I mean, one data point, like signal from the noise, we talk about a lot, and I'd be careful referencing an individual bank, whether it's Bank of America or even Goldman Sachs, which is like the highest signal of the individual investment bank historically. I would say, I'm not sure it's the case anymore, but Nomura, all these investment banks. You see a report that says like BFA, Bank of America now thinks 6.25. That's not what a lot of times these reports are just picking out an outlier investment bank. Sometimes it's the average
Yeah,
investment, of all
true.
the investment banks. We don't really know. I think the best signal of the versus the noise to look at is what the Fed futures are pricing in,
Yeah, I
and that's
agree.
really all the market participants, where the market thinks the rate is going to go to at what time. And it's all calculated in the dot plot and all this stuff. It's all calculated there. There's websites. I think the CME even puts it out or something on its website. So I think that's the best signal versus, reading reports. When you see a report that says Deutsche Bank thinks the Fed terminal rate's going to go to 7%, that's just usually an outlier being reported. And sometimes I think people can take that. I'm not saying the B of A one you met referenced is, but
Yeah.
it's something to be careful of, I'd say, for
No,
people.
it's a good point. I mean, otherwise, like you get all these like reports on a one-off analyst, like, oh, Gordon Johnson downgrades Tesla to
Yeah.
$20 a share. Like that's not
Yeah.
really helpful
Yeah.
information. So I think you're
Yeah.
right. You need to look at the information in aggregate, what the
Yeah,
market is
exactly.
pricing.
Yeah. So Kathy Wood also had an interesting interview on CNB, a big feature interview yesterday, Monday, talking about the macro market. And she thinks, for some reason, the unusually warm January in the Northeast, especially, which is where most of the population, except for California, is in the country, is the East Coast. Then, because there's such an unusually warm January, somehow that played into higher than usual inflation, CPI numbers, metrics. You and I touched on this a little bit yesterday. I'm sure she has a good reason for it, but we couldn't ourselves reverse
Yeah.
engineer what the reason is for that. But I'm sure there's a correlation there, right? What do you think?
Yeah.
Did you look at it?
I mean, in my background, I'm used to thinking that colder winters lead to higher prices, and that's certainly true within energy specifically. So, the colder it is, the more natural gas people use to heat their
Mhm,
homes and power plants use to create electricity. And so that just, more demand leads to higher prices. So
mhm.
certainly, a warmer January would lead to lower energy prices on the whole, but it probably also leads to people, going out and going to restaurants more often. I mean, if it's like
Yeah,
10 degrees out in Michigan, like it is sometimes, I'm not, going out if I don't
yeah,
have to. Uh,
yeah,
so, so my best hypothesis is really just that it's people are going out and spending more, and being outdoors a little bit more than they otherwise would if it's
yeah.
the weather's relatively mild, which
Yeah,
kind of
and she
makes
was
sense.
talking from, like, a seasonal perspective. Seasonally, January is where people are kinda staying indoors more maybe and not doing
Hmm.
things as much, and the inverse of that happened a little bit this past January. So seasonally, it was
Yeah.
higher than expected from a seasonal perspective is was her point, I
Yeah.
think.
Well, and I know
Yeah.
like that clearly makes sense on like car purchases. I know January is one of the worst months of the
Mm,
year for car purchases, because like if it's
yeah,
15 degrees out, the last thing you want to do is like, go to a car dealership and look at a snow-covered vehicle and like say, yeah,
yeah,
this is the one that I want. It's much better to do
yeah,
that when it's like 60 out and you can see the colors and take your time looking at
yeah,
all the different ones. Or just
mhm.
buy a Tesla online. It's a way better experience than going to a dealership.
Yeah,
but
yeah.
but for the traditional, kind of car buying experience, I think that definitely does hold.
Yeah. So one last thing on the macro. I mean, the reason we stress this stuff, macro stuff, is because there's so much buying and selling across index ETFs, for example, or just like based on what they think the Fed and interest rates are going to do based on inflation. And so it's really moving. Like you might be following a stock like Roblox, like we follow, and we're going to touch on later, and it had great earnings numbers, and the stock was up 25% the next day. And then like over the last few days, it's come back down to where it was the last like week or two because the whole macro market, has crushed growth stocks once again. So, same thing with I know some people that follow Tesla also follow for shift payments or whatever, and it had great earnings. We're not in that, but it had great earnings up ridiculous like $7 or $8 today, like 20% today. But the same thing could happen like the next few days if there's growth stock corrections, it could come right back down to where it was yesterday. So
Yeah.
it's just kind of like when you see that happen, you have to wonder why is this happening, and then you have to examine the macro market and
Yeah.
understand that it's really huge tides of buying and selling of all baskets of growth stocks all at once or selling them all at once, depending on what the market thinks the Fed is about to do. So that's why we talk about macro risks a lot.
Yeah.
And
with
yeah,
with Lemonade, I was gonna say we had that like plus 18 to minus 5% swing like in one day. It was crazy. The
yeah,
the day after earnings, it would shot
yeah,
right up. It was up like $2 or something close
yeah.
to that, and then it was negative by the end of the day. So yeah,
Yeah,
it's
yeah, lemonade
you
for
know
sure
it's
too, and that doesn't surprise me as much with lemonade because it is a 1 billion market cap company, so it's a lot less liquid by nature. Even if we see the volume of like 100 million shares or
mhm.
10 million, 20, I think it's like 15 million shares a day traded. I bet you like 80% of that's just like algo in and out trades. It's only probably a few million of actual net buyers or sellers. But on a
Yeah,
earnings day, an extra million of buying or selling could push that stock up a dollar. Or probably. I'm just guessing, but it's so illiquid because it's so small cap and yeah, but yeah, it's wild the swings on some of these stocks, especially with you know um so real quick, the two main macro risks before we move on to Tesla I see is further Ukraine Russia tensions eventually. Like if Russia detonates a tactical nuke, I think that's possible if they feel like they're out of other options and they want to just escalate, or the US is continuing to escalate things and sends more tanks and more money, and I don't know, there's just further escalation of Ukraine. Russia could panic the market, I think. So that's a macro risk that's not Fed interest rate related, although the Fed might be more encouraged to lower interest rates if it sees more other macro risks hitting the global economy and the market. And the other major macro risk is just the Fed and what it's doing with interest rates. Those are the two main things I see in the macro market. Do you see any other risks, or do you disagree, or what do you think, Matt?
yeah. So I do agree with those, and I heard your interview with Dave, your conversation with Dave Lee over the weekend. And I think you I think hit it on the head with your comments about the nukes there, like tactical nukes in particular. Um, like that would just create all sorts of panic. And like, I wouldn't surprise me if like, major indices drop, 10 or 15% if that sort of
Yeah.
thing happens. But
Mm.
I also think like it's more like the fear of the word nuke itself, like
Yes.
then like the tactical nukes are not. It's not what we would think. It's not like Hiroshima or Nagasaki. It doesn't necessarily indicate like a massive escalation. But you never know. I mean, that could be this type of thing that gets NATO involved, and then you've got like NATO versus Russia, and then like that could be a very significant risk.
Yeah.
But if there's some way to de-escalate, if that kind of almost worst case scenario of a tactical nuke goes off, then that wouldn't necessarily strike me as like the worst possible outcome. So I really resonated with what you were saying about the risk of that and how it may not be as substantial as maybe some people might think.
Yeah.
But the other risk that you didn't touch on that I've been thinking a little bit more about is just the Chinese economy, and this is maybe
Mm.
not as much of a short term risk, but there was somebody posted a really great thread on like the Chinese real estate like bust that's kind of unfolding right now. There was the whole Evergrande thing maybe a year ago
Mm.
or 6 months ago. But there's still reasons to believe that there may be, kind of structural problems with China's real estate market, which is unlike the United States in that like most U.S. Individuals, and probably the same is true for a lot of Western economies, put their savings or they manage their savings by investing into stocks. Well, in China, there's kind of like lack of trust in stock markets and transparency and everything. So people put it in real estate. And so if like the Chinese real estate market, deflates and prices go down, then that could actually wipe out a substantial portion of the country's overall wealth. And so kind of
Hmm.
coupling that with China's population decline potential, which I'm starting to become a little bit more, I don't want to say concerned about, but it's starting to seem more and more probable that China does have a very serious demographic problem that will play out over the next couple decades.
Mm.
That's it's probably more of a medium term kind of macro risk than a near term one, but it's something that has been
Something to keep
elevated
an eye
on my
on.
radar lately.
Yeah. I've heard the China real estate bubble for many years now, and it probably is a bubble. But I try to think about like, China is not a free market in the sense that the US is, where China's government, I feel like, does everything it can, or everything it does everything, not only it can, but does everything to make sure some type of collapse of real estate prices will not happen. Like it'll do something artificial to the property prices or something to ensure that it doesn't wreck their economy, because it's not a free market like the US is, where there's not really any real controls. There's like regulatory environment, and law, but China government has like complete control almost over its economy, I feel like. And so I think they
Yeah.
probably have a close eye on that stuff. But there comes a point where maybe they can't control it, and that would be a massive issue, but I'm not sure that's anytime soon. We'll see, I guess.
Yeah,
But
I
yeah,
mean, it really
it
is
seems like
a longer term issue, and I
yeah.
see several people in the comments basically saying, that's not just a China issue; like it's more serious in Japan right now, and that's certainly true. And a lot of
Mm,
the U.S. and Europe certainly have population issues as well.
yeah.
So I mean, this is something that Elon again was talking about well before anybody else. It seems,
Yeah.
he was talking about the risks of AI, and then we've got
Mhm.
issues with Chat GPT, and people are like now more concerned about it. So
Yeah.
it's kind of crazy how ahead of all these major trends and risks that Elon has been.
Yeah, I mean, speaking of the new report that is coming out, that Elon's starting up a Chat GTP like company or firm or secret project that's going to be non-biased. You saw those reports coming in the
Yeah,
last like 24 hours. So I mean, it's that seems like something up his sleeve that he would certainly. That's not that I feel like anyone could have predicted that. Like if he was like somehow he's working on that already, and he's probably been working on that maybe in the dark ever since he left his association with OpenAI. Even I don't know, but it seems like it seems like right up his alley, and it's probably a subset of. I would imagine it could be somehow under the Twitter umbrella, or instead of a completely separate company. What do you think? Or do you think it's going to be a completely separate company, or part of like
I
Tesla
don't
or
know.
Twitter, or what do
I
you think?
I kind of wish I understood what happened with him at OpenAI because it seems like he already tried to do this, and so I don't know exactly where it went off the rails. I know
Hmm.
they eventually became a for-profit and went to
Yeah.
a closed system rather than open source. But I don't like when did that happen, and like whose choice was that? So I'd be curious, like, how is he planning to
Yeah.
avoid the same pitfalls that he already went through 7-8 years ago with
Yeah.
OpenAI? So I don't know how we do it. I mean, the thing that strikes me is Tesla has such an amazing AI team already. I mean, he already says that they're the leaders in kind of real world AI. So it
Hmm.
might make sense to do it under the Tesla umbrella. But I'm not sure. Yeah, I could certainly see it under Twitter as well, or as a standalone.
Yeah. Yeah. I'm not sure either. My suspicion with OpenAI is there was some kind of like almost falling out with him and Sam Altman or something like that, and the other
Hmm.
co-founders of OpenAI. Like maybe Elon, initially, co-founded it with them, thinking that he was going to be able to steer it and provide the direction. And then he wasn't as involved there because he's spending so much time with Tesla and SpaceX. And here, Sam Altman and the other co-founders are like steering in a different direction that Elon wants, and they're not listening to him as much as Elon wants. Like Elon might send a note over, like, "Hey, why are you doing it?" And they just like, "No, we're going to do it." And then he just got fed up and was like, "All right, I'm out of there." That's my
Yeah.
guess. And they're just like, "Whatever, we're doing it our way," and it was kind of like that's my if I had to imagine something like that might have happened. Not like a complete bridge burned, but just kind of like, yeah, you're doing this without me then kind of thing. Because it's, he has corresponded with Sam Altman once or twice on Twitter, but he doesn't seem to be as close to him as he used to be. Like I remember he's done like interviews with Sam Altman way back with other interviewers. There's been like one or two of those in the past, and you just haven't seen him correspond with Sam Altman as much as you think he would if he,
Yeah.
didn't have some sort of falling out.
And I
So,
think there's some well noted animosity between Elon and Bill Gates, and
oh, for
probably to a
sure,
lesser
yeah.
extent Microsoft, which is such a
Microsoft,
huge player
yeah.
in OpenAI right now. So
And I was wrong on
yeah,
Dave's chat. Microsoft will own 49%. I said I wasn't sure if that was the case on Dave's chat the other day, but yeah, I re-looked it up, and Microsoft will be owning 49% of OpenAI once it recoups, 7.5 billion of the 10 billion they invested in profits from whatever. So Microsoft is steering much of the ship of OpenAI. And also there's, the Azure cloud infrastructure. I think OpenAI relies heavily on a lot of the
yeah,
infrastructure that Microsoft provides. So I think Microsoft has a huge influence on the direction of OpenAI
yeah,
for a lot
yep.
of
No, I
reasons.
think that's true.
Yeah. Well, anyway, let's move on to Tesla here. I mean, that's the big news. Investor Day, right? Master Plan Part 3 is being unveiled. He had mentioned that in a tweet, right? And this has been a long time coming, right? Master Plan Part 3. I
Hmm.
think it was previewed almost a year ago or last
Yeah,
summer, and we hadn't heard anything about it for a while. And so we'll finally see that and whatever it entails, and maybe more on Investor Day tomorrow. So, what are your thoughts of Master Plan Part 3? Is it going to involve mega packs, solar farms, solar roofs, or not really so much that, more on like mining and getting lithium supply up to speed? And what do you think, Matt?
yeah. So I get the sense from looking at all the different breadcrumbs that they've left. Elon talking about this being for like the broadest definition of shareholders, basically meaning the whole planet. And he talks about how this is going to be like how we as a society can I forget exactly what he said, but it seems like he's using very broad kind of terms of how can we get to sustainability as a species, and the fact that he's talking about how this intersects with boring and rocket lab or not rocket lab SpaceX and
Hmm.
um, some of his other companies. To me, I'm probably expecting less detailed individual product updates and more kind of high arcing strategy, and how are we going to get the material, like what's the goal, okay, get to 20 terawatt hours of battery production
Yeah.
by as a society, not Tesla's goal, as
Yeah.
a society by
Okay.
2030 or whatever. And so to do that we need like just the napkin math of how many tons of lithium and everything else. So I think it's going to be a lot more high level. I think there will obviously be some product. Gen 3 is very clearly going to be talked about there. But I think it's going to be more like this is the type of engineering that we're going to be doing, kind of similar to what they did with Battery Day, where they talked about how they're going to reduce capex per unit of capacity and reduce the manufacturing footprint, and increase the efficiency,
Hmm.
increase the range of the vehicles. Like I think it's going to be kind of high level like that rather than
Mm.
entirely product specific.
Yeah.
But I'm just very excited. How are you thinking about it? What are your expectations going into tomorrow?
I think so too. I think there'll be some product announcement unveiling as well. Um, But I think for the master plan part 3, I think they're going to go over how they're going to achieve the scale of manufacturing with new gigafactories. Mexico will probably be announced officially
Yeah,
tomorrow, I would imagine.
I agree.
Maybe Indonesia too, or something, or some other factory. I'm not sure, but I could see 2 factories being announced, which would be cool. Um, the mining, maybe Tesla's gonna state, announce some new partnerships for mining tomorrow that hasn't been reported yet in the news. I know in the last few weeks there's been a few, agreements for materials or mining with various rumors even. So maybe they'll make it more official tomorrow with some of those announcements. Um, there was some clue that like the Boring Company and SpaceX would be included in the master plan part 3. We're trying to figure out how that's possible, but maybe the Boring Company has something to do with mining. It's going to help with some. Maybe Tesla's going to do its own mining if they need to, or they'll say that. Or I'm not sure on that front. But maybe they also are going to talk about not just lithium, but this sodium batteries, right? The sodium ion, is that what
Sodium
so
ion phosphate or
sodium,
something like
something
that, I
like that.
think.
Yeah. So that doesn't need lithium, right? So
Mhm.
I've seen more and more talk of this, and I think there's some Chinese company. I'm not sure if it's CATL, some other company that's like
I think it
really,
is CATL. Yeah,
yeah,
they're
CATL. They're
trying to
really
do it this year.
ramp it up. Yeah, they're trying to ramp it up fast. And China, if anyone can do it, a Chinese company can ramp it up. We've seen what China can do and Chinese companies can do. So that would be exciting for Tesla to say, like, yeah, we have our Baskin Robbins assortment of battery chemistries, and we're going to be adding sodium ion for, our new product, or whatever, so that would be cool. I think just to have more supply potential versus just with lithium constraints right now, or how fast that can be ramped up. So I think that would be helpful. But I think from a product unveiling perspective, and they'll present their vision of where they need to get to, like you said, with certain metrics of, how many kilowatt hours and such they have to get to for batteries by 2030 or whatever. They'll reaffirm those metrics, I think. But what I'm most excited about is sort of the product announcements and the product, and I think it's going to be 2 things. This is what I think. I think it's going to be the Model 3, this Highlands project. Maybe that's what they call internally at Tesla, but I think that's basically a refresh of the Model 3, where they're going to refresh the entire manufacturing process for it, so that
Mhm.
instead of costing, what is it like? What do we estimate? 30,000 or 30 or
I
35,000 to
think it
build
was
the
like
Model 3?
32. Kind of depends on which
Yeah.
site you're talking about, but
32.
yeah.
Yeah, let's say 32. So maybe they show like, oh, now we think we can build it for $20,000 once we're ramped up on this new manufacturing process. Maybe initially it's going to be 25,000, but as they ramp it up, it'll be 20,000, and we will sell it for 25,000. The Model 3, it'll be better than the current Model 3. The specs will be the same, but it'll have like newer technology of some sort, maybe. So that's my guess, is that the Model 3 is just going to be the lower cost car,
Really?
and
That's
that's my guess.
okay. That's
Yeah.
I'm not in that camp at all. So that's kind of interesting. You think that
Yeah.
they could lower it down to, 25,000 just with
Eventually, it'll
the
be like 30,000 maybe initially, or 30 or 35,000. The newer ones, it'll have like all 46 A's, single die cast, or something very innovative with how it's manufactured. More innovative than what's going on with the Model Y, because Tesla's always
yeah.
iterating to do something better, right? So it'll be, I mean, think about it. If they don't do that, the current Model 3 is already cannibalized so much by the Model Y. And if they don't do that and they have some other compact, then the Model 3 currently is obsolete, basically. Like who wants to
Yeah.
pay $40,000 for a Model 3 when they get a 25,000 compact car that's probably just as cool, as slightly smaller? So I think that's what they do, is they're iterating the Model 3 to be like the big thing. And then I think on top of that, you'll have the Gen 3 platform. It's kind of confused, Model 3, Gen 3. Gen 3 is like the next iteration of vehicle. So I think the next iteration of vehicle will be the robotaxi. And I think that's going to be separate from the Model 3 or the Model Y or any conventional car. It's going to be a completely different design, and it might even cost more to make. Maybe it's like a $40,000 or $50,000 cost of goods build, because it'll be like a minivan type futuristic thing that has all this cool stuff to be able to do, and it'll be bigger and much more range, maybe even, and better specs and all that. But because even though it's costs more to build, the return on capital for such a robo car is so great that it's de minimis, whether it costs 25,000 or $50,000 to build, because this thing's running 80% of the time or 90% of the time, delivering goods, shipping people or things back and forth, and maybe carrying even the AI bot around to do different special jobs here and there. But it's just making money, 23 hours a day, 1 hour a day charging or something like that. So it's going to just have such an immense return on capital. It doesn't really matter that it's fine that it costs 50,000 or 40,000 billion. It's going to be super cool. And so that's my guess, is what this next Gen 3 platform is, just like a new type of vehicle completely that we're going to be surprised with. They'll show it, the prototype. It won't be produced until 2025, let's say, maybe, but they're going to unveil it and what the purpose of it is, I think. So that's my guess on the Gen 2 platform. That's kind of, I mean, I haven't seen too many people talk about it like that, but that's my thought. What do you think about that?
Yeah, I mean, I could
Too
certainly see that being
crazy?
the case. Well, no, I don't think it is too crazy. I mean, we know robotaxi is going to be like probably the platform or the vehicle to end all vehicles, right? I mean, that's going to change the whole like notion of car ownership and everything like that. So,
Hmm.
yeah, to me, it seems reasonable that's there is some change there. I've heard all sorts of different theories. Like there's the connecting the dots I had this like pi then tau, version or like theory, because Elon's been tweeting those types of things out. So I don't know. In my mind, I'm undecided on whether I think they're going to go with like some, let's say, a $25,000 or $30,000 car, and then the robo taxi. Yeah, I'm not sure if it makes sense to do both or what Tesla's thinking, because I think if they do like a $25,000 car, um, and then the robo taxi comes after that, like doesn't the robo taxi just like 2 years later Osborne that cheaper
Well, the
version?
robotaxi, I think, is not going to be consumer owned. I think it'll be
Yeah,
consumer
right.
used. But I think the $25,000 Model 3 is what I think it'll be. Just a much less expensive Model 3 that's kind of cool or refreshed and such. I think people will still want to own that and drive that and have possession of it anytime they want without having to call on a Tesla app to pull, the robo
Hmm.
car up for them. It's just like Uber, or so I think the robo taxi is going to be more a fleet thing for Tesla initially, and maybe certain businesses or fleet operators can get it, and maybe individuals can get it, but it'll just be like sold for $100,000 or $80,000. I don't know. It'll be ridiculous, not much more expensive, and maybe it'll be licensed. I don't know, but it'll be more of a service vehicle, like
Yeah.
a robo taxi is a service versus ownership. That's my thought.
That's where it just gets so crazy. I mean, you would imagine it would probably cost something comparable to build. So maybe $20,000, $25,000, something like that. And then,
Yeah,
but they can sell it for like 75,000 or or
yeah,
something like that, like with the
yeah.
software integrate. It's just like if they can actually figure that out. I mean, watch out, stock market, because that's just going to absolutely explode. But
And if
it's
that
I think
happens, though, do you think the market even believes them tomorrow? Like
no,
Thursday? I don't think so. The
no,
stock
no, they
tank.
don't.
If this happens, the stock tanks 10 or 20%. Even though it's long term conviction over Thursday and Friday. The only way the stock
Yeah.
goes up on Thursday and Friday, I think, is if they announce like the compact Gen 3 $25,000 car, and we're delivering it, we're taking orders now and we deliver it next month or next quarter or something, like the first ones, or if it's well ahead of schedule, if it's going to be delivered soon, and they think they're going to have a 20% profit margin. If they talk Wall Street numbers, it's kind of boring, just like a lower price,
Maybe.
smaller car, but it's just like huge volumes and Wall Street can model it in their spreadsheets, then I think the stock goes up. But without that, I'm not sure the stock goes up. What do you
Yeah,
think?
I think like if they announced a buyback or something like that, I think that would certainly help too. But
Hmm.
yeah, no, I agree with you. I think they're unlikely to do that. I think they're going to talk in much broader terms, and so we'll probably get super excited and nerded out about all this stuff. But I think there's also reasons for legitimate skepticism around some of this stuff, just because you know certainly if I go back to myself in 2018 listening to AI Day, I would have thought that we were at or very near robo taxis by the time early 2023 came around 5 years later. And
Yeah.
like from where we're standing right now, like the rate of improvement has but not been nearly as kind of exponential, as I would have thought. So I think that rate is going to increase, but it's hard right now, I think, to say, all right, even if they announce the robo taxi, when will we as bulls get confident that like they've actually solved this problem? And then maybe 6 months after that, the rest of like Wall Street will agree.
Yeah. 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 So And I think the Tesla bot is going to be a much bigger part of tomorrow than people. I think it could play a big role tomorrow. I mean, the Tesla bot is very important to Tesla's future, according to Elon Musk. It's going to be bigger than the car, right? So
Mhm.
it has to be a big part of Master Plan Part 3, I would think. Is there going to be a Master Plan Part 4 that it's part of? If not, then Master Plan Part 3 is where the bot plays a big role too. So um the bot will be a major part of tomorrow's presentation. I think
Mhm.
I feel like not enough people give enough attention to the bot. If it's going to be, if Elon says it's going to be bigger than the car, it's going to be bigger than the car eventually. Like he's made that kind of, just like he knows full self-driving is going to drive more revenue eventually than selling cars. We sort of believe that now. We can see that, but it's still not here yet. But the bot is like 2 levels away. It's harder to see
Yeah.
around that corner and see that. But Elon clearly sees, farther ahead than anyone else on this stuff pretty clearly. So
Do
I
you
think he'll.
so at the last AI day, they said they were like a month or a couple of weeks away, I think, from having the bot walk, the newer
Mm,
version. Do you think
that's right.
they bring that back out and say, hey, look how much progress we've made, and
I
it
think
can
it's
walk a
very
little bit more
likely.
naturally?
Yeah, maybe
That's
they have a
that'd
few
be
bots
interesting.
walking around doing something, serving drinks to people at the investor day. I don't know. It could be something cool. That would be amazing, right? That'd be cool to
That
have it functional
I
doing
I would
things.
lose my mind if they actually had it out there mingling with people. To me, it's like not even close to that yet, but
Eventually that'll be maybe in a year
eventually it will.
even.
Yeah, yeah.
Maybe.
Yeah,
But
and
right now
that's
it's not gonna
but
be
I agree
mingling
with you.
like yeah, like maybe it'll be
And
more
to
of
me,
a design thing. Like he'll be on stage and be like, I'm kind of thirsty, and then it'll like bring out a water bottle for him and walk away or
yeah,
something.
something like that that's actually practical would be really, really cool and very
Yeah.
inspiring on the rate of confidence that they've got.
But
Um,
like Martin Maldus says, the comment, the bot will certainly tank the stock. Yeah,
it's so
if he
true.
makes the
It's so
bot the
true.
presentation, we all know it's a big deal, but the stock market will tank because the Wall Street analysts will be like, "What the heck? I don't know what to do with
Yeah.
this," and then the stock will tank. Anyway, what were you saying?
But I do think, and I hadn't really thought about this until you just made that comment, Emmett. But like if you're really taking the big kind of societal level look at like how do we get to the good future, I think the bot has to be a part of that. I mean, because there's conversations about the human rights situation with
Yeah,
mining cobalt, right? So like
yeah,
the bot can help do those most dangerous, most like nasty jobs that we need to do in order to kind of accelerate the advent of sustainable energy, let alone like Mars exploration. Like I'm sure I would be shocked if the first, Starship um, trip to Mars doesn't have a couple bots on it just to
it's
like,
gonna have a lot of
try out
bots.
doing
Yeah,
something.
it might be
Yeah,
all bots even. Yeah,
I would think so. Yeah.
yeah,
And they can, do some work and they don't mind the radiation and,
yeah,
they could work. Hopefully, if everything goes well, they could work for like 2 years up until like just getting stuff ready for humans up until the next,
yeah,
Earth Mars, what is it called, injection orbit or whatever it's called. Um,
yeah.
so yeah, to me, the bot is absolutely critical to the future of the entire like goal that Elon has in mind. But it's Martin's absolutely right. Like nobody's gonna like nobody aside from probably this like Tesla Twitter community really gets that or believes that that's true.
Yeah. And he mentioned SpaceX is going to be part of Master Plan Part 3 too. Maybe it has to do with Starlink. Maybe not really SpaceX. Maybe Starlink. That service will be integral into all the future vehicles. The Cybertruck especially strikes me as a dystopian car that has to have its own Starlink connection. Each one, I would think. So
Hmm.
yeah, we'll see tomorrow. I mean, the Cybertruck will be a big part. I think the Cybertruck production line they'll show off. It sounds like they have a whole bunch of Cybertruck uh, prototypes they can show off and let people drive around in or test out or something. So, one thing we touched on in our prep call yesterday a little bit was the like by Elon about the tweet of Buffett's share buyback comments,
Yep.
right? So that could be interpreted as like, well, Elon in principle, I think likes it from his investing, whatever part of his brain he dedicates to finance and investing, which is probably small compared to engineering and the future of humanity, obviously. But he's been right on like macro market financial stuff lately. So he could be just liking it because of that, or he could be liking it because it's sort of a signal to like Tesla's plans to announce something tomorrow. Maybe. What do you think, man?
Yeah, well, I mean, I forget when it was, maybe the Q3 call, sometime in the fall last year, I think, when this buyback talk was really running rampant, he said, in principle, he kind of supported the idea of a buyback, and I thought he even said something to the
We'll
magnitude of ten
probably
billion
do it or
dollars.
something. Yeah, I thought he
Yeah,
said that
like
too. We'll
So
probably do 10 billion at least or something like that.
yeah, I mean, to me, they said in the invite that they're going to talk about capital allocation, and I think we are all in agreement that like the first priority is the actual R&D and like the building out the plants and like ensuring that they've got enough cash to weather any sort of macro storm. But once you've got that, if you still got $15 billion left over and you're generating, cash flow on an ongoing basis, why not do a buyback? And so that's what I think Elon kind of thinks, and I think it's more likely than not that they will announce a buyback of some sort tomorrow, or at least an authorization to say, yeah, we're authorizing the company to do a buyback. There's no plan for exactly when we'll do it, but when we think that the market conditions are right, we have the authority to buy in the open market. I think
What are
they'll
your
do something
odds of
like that.
that? What do you think? Like 50%, 70%? You said more likely than not.
I
So what do you
I
think?
think I would say 65%. To me, it
That's
seems
pretty sure. I
that's
would say
it's
I'm more
it's
at
a little
like,
bit better than a coin flip, but it's
yeah,
not,
yeah,
it's
yeah.
not like
I'm at
80%.
I'm at 40%. I mean, I think it's
40?
very
Okay.
significantly possible. I'm not saying it's likely, but I think I would not surprise me if it happened, but I don't know if it's likely. That's like, I could get there. I could get there with another signal, another liked tweet by Elon or something. But right now, I feel like I'm at 40%. Before that liked tweet, before we talked about that, I was at like 20%. I'd be like 10 or 20%. So that definitely increased my likelihood of it happening. But we'll see. Yeah, tomorrow, I hope they do, because I think that the stock would like that as well, short term. So that'd be interesting. Farzad, hey, how you doing? Farzad's in the comments. He says 80% they will, in his opinion. So he's much stronger on that.
Yeah.
You know,
He also says he likes you too much, and I wonder what that means. Like, he likes you, but to an inappropriate degree, I think is what he's saying.
Yeah, yeah. So the other big thing the stock reacted to yesterday, and not just hype for Investor Day, coming up, but I think also the Giga Berlin report of the 4,000 cars a week
Yeah.
run rate they're at now. Now, does that report say they're at 4,000 a week going forward, like every week consistently, or is it one of those things like, yeah, we're at 4,000 a week for this hour of this day? We were at that rate, but we
No,
probably
it
can't
was
do it for multiple hours in a row. It's like, it's hard. Sometimes it's confusing. Sometimes they give a report and it's like, yeah, we're at this rate, but it was just for like one like turbocharged hour or one turbocharged
yeah.
like shift, and then that's not anything close to being consistent though. Did you dive into it much? Do you see? What do you think?
Yeah, so I think during the Model 3 ramp in 2017, especially, that's when we got a lot of the burst rate, like, oh, we did X number of Model 3s in 1 hour, or we proved
Yeah,
that we could hit a rate of 5,000 a week.
yeah,
But this tweet, the way that it was worded from Tesla Europe,
yeah.
it said that we hit 4,000 vehicles in the last week. So that's clearly maybe it
More
was something
official.
of a burst week or something like that. But I think they were at 2,000. They noted that they did 2,000. I want to say it was back in October or something like that.
Yeah,
So to me, it seems indicative that they're just kind of on the steady ramp up that S curve. Maybe they dip down to 3,900 next week, but to me, it's not like this won't be sustained
yeah,
at this level for another 2 months or something like that. I think they're pretty much there already. And the goal was, I think, to get to, I think it was 10,000 a week by the end of this year.
hmm
So to me, it's very good indication that they're well on their way to achieving that goal. I mean, they doubled in the last 6 months, let's call it ish. So if they
yeah.
double again, then they'll be almost to the goal, 6 months from now. And so to me, it's all tracking to exactly what they said they were trying to do.
Yeah. I'm sure everyone on this channel follows Rob Maurer's Tesla Daily. If you don't, it's must watch every day. But he did a great analysis of this yesterday on his channel, showing the timeline between 1,000 for the week, then 2,000 for the week. It's sort of slowly accelerating. And I guess if it continues to slowly accelerate in the same degree, it would be like Q3 or something next
Mhm.
where they might have close to 10,000 a week or something like that. He
Yeah.
says, but he did a good analysis on that on his channel. So that's great news, and I think that's part of the reason the stock popped 5 or 6% yesterday. Today, hey, we're pretty much flat. I don't know. We started the day up, and then when we were starting our show, we were down a few bucks, but now we're sort of flat. So yeah, we'll see how the day ends. The Nasdaq is close to flat, up 0.5%, sort of de minimis. Anything up or down less than 1% these days feels like noise almost with how volatile the market is. But Tesla, flat. That's not bad. I'm okay with that.
Yeah. So while we're talking about production on to Berlin, one thing we didn't talk about yesterday because the data wasn't out was the weekly insurance figures out of China.
China, yeah.
So they did I think it was 10,700 in the past week. And so if you're looking at what they've done year to date, it's like roughly half the level where they were the past quarter or so. So it's certainly not encouraging news out of China. There was this shutdown, and so you could say, all right, maybe there's not, there's the Chinese New Year holiday, and so that disrupts things. I think that's true to an extent, but they also had inventory, and we've had enough weeks of data now where even despite the steep price cuts, it doesn't seem that demand is like robust or even like good in China, I would say. So is
Yeah.
that something that concerns you, or how are you thinking about the local Chinese market right now?
Yeah, I mean, I think they shut down the Model 3 line recently. I think there's clearly a demand issue for the Model 3 at the current value proposition of the current Model 3 in China. There's just a lot of good competition there, and Tesla's brand has been tainted enough where they're just not, and the economy of China was in like a recession. Apparently, it seems, we don't know for sure, but they're sort of climbing out of that. It seems like now that the COVID lockdowns were all ended, a few months back. So I think my guess is that this refresh Model 3 is being banked on to drum up demand in China again, and I would think that the refresh Model 3 comes from China, the China design
Yeah.
studio, and it's going to be it'll be less expensive and cooler. And I think there's a lot of people maybe in China, savvy buyers. We should check with Leon, the guy we interviewed, about what he's hearing on the ground there. But there's a lot of savvy buyers in China that will wait for the latest version of something. So I think we could be
Yeah.
seeing some of that. And obviously, it's shut down in China, the Model 3 line, for a reason, right? It's not just shut down for nothing. Like, they're I think there's reasons that they're revamping or refreshing the line, whatever it is. But it's going to be a whole new Model 3, in my opinion, that's like refreshed. That's what I think. And so I think that'll just bam, demand will just skyrocket pretty quickly once that's announced, if that's announced in China. Now, can it be sustained at what level? I'm not sure. It depends on the pricing and the overall perception of the value proposition versus the competition at that time. And does the brand get hit again in China or not, with weird lawsuits, or not lawsuits, but like brake failure claims, or there's been some odds and end thing, like the Chinese local companies have been trying to taint, Tesla's brand, supposedly. So
Right.
we'll see. So yeah, I mean, tomorrow I think we'll answer a lot of that question that you brought up. So I think the big risks for Tesla, the sort of the not existential, but the biggest risks. We talk about the two biggest global macro risks, or the two biggest Tesla risks I see for Tesla is, number one, in China. Being caught, not just the China market overall, but more particularly the geopolitical crossfire risk that Elon and Tesla can get into there, especially if China partners with Ukraine. I mean, partners with Russia on this Ukraine-Russia conflict, and the U.S. is like having propaganda wars with China, and Twitter's caught in the middle of it with Elon at the helm of Twitter, and then Tesla's in the crossfire of that. That's a big risk I see if it gets escalated. China just like does something nasty with Elon and Tesla, like shuts them down or something. I think there was this morning a report in a CCP paper, the Global Times. I don't know if you saw this, but they reported, this is like a mouthpiece for the Chinese CCP, that giving Musk a big warning, like not to retweet anything about the the COVID lab leak theory in Wuhan, the Wuhan lab leak theory. And I think Elon like retweeted or commented on something like that on Twitter recently. So it was like a big warning to him, like, you better watch out, like, don't bite the hand that feeds you. There was some like saying in it, like, so that's not to be taken lightly. I mean, did you see
No.
that? You didn't see
No,
that?
I didn't see that, but
I'll retweet.
yeah,
There's a Squawk
it makes
Box
sense.
interview about it.
Definitely makes
Yeah.
sense. Like, but it's so this is where I struggle to see, how Elon navigates something like that. He's been, I think, very deft at his handling of the kind of Chinese political situation so far. But at the
Yeah.
same time, like he very clearly has issues with the way that the COVID lockdowns were handled and the whole COVID pandemic and Fauci. And, regardless of your own views on this is something that he very obviously has strong opinions on. And he tends to not back down from fights like this. But, when he's getting a stern warning like that from the CCP, I don't know. I could see Elon even backing down, from that. But
I just
could
retweeted that news report if anyone wants to watch it. So it's definitely a signal to look at.
Yeah, I could also just see him saying, you know what, like, screw it. You're like, nobody's going to control me. I've got enough wealth. I can do whatever I want. And
Tesla will
continuing to just pick this fight,
retweet whatever he wants.
And that could be bad news for Tesla. So, and I don't know how I feel about that. Like as a freedom loving American, I kind of like somebody willing to get punched in the face for speaking truth to power. But as a Tesla shareholder, that is not a battle that I really want him fighting. So I'm a little torn on it personally.
I'm torn on it too. Just like his purchase of Twitter, I was torn on. It hurt. It definitely, him selling Tesla stock and the PR around it hurt Tesla's share price in the short and medium term at the time. But I mean, you knew it was the right thing for the future of society. So similar, at some point there's going to be some falling out. I think it's almost inevitable. I don't think Elon chooses this time to let it happen. But at some point, he's going to stand up for himself and freedom of speech, I think, and not heed to the Chinese CCP's warnings on what to say or what not to say. I think he'll still allow, like he says, like the government laws in China to exist. And like in China, Twitter doesn't have to exist, right? That's fine. He's fine with that. But outside of China, he should, in the US, freedom of speech is critical. And so I think at some point he'll stand up to that principle. I kind of hope it's not yet, though. I don't want it to be today or tomorrow with this latest report.
So I just let robotaxis be solved first, and then we can.
The other big risk for Tesla stock. So that's one big risk for Tesla stock is the China situation, not just the economy, but the geopolitical stuff going on there. And the crossfire of that. And the other big risk, which you mentioned yesterday, which I also agree is a risk, is the NHTSA recalls are just like an early symptom potentially of it. I mean, they're just over-the-air update requirements by NHTSA, but it's called recall, But what are your thoughts on this as a big risk to Tesla, Matt? I mean, you've been thinking about it more.
I think it's a bigger risk than most bulls are, giving it credit for. That this is probably the most substantive of the recalls that we've seen so far, because it's actually delaying their rollout of FSD beta to paying customers. And so far, we've seen Tesla just kind of laugh at these, recalls, be like, "Oh, we already solved it, but we've got to issue this, paper letter to our customers anyways." And it's always been a quick fix, but like, I've experienced the speeding through a yellow and a couple of like the slowing at a stop sign. These might not be as quick fixes as some people might think. And so I think it at least does have that impact of like, I would imagine very small impact, but a real one in the short term would be, well, they can't recognize any FSD revenue on new sales. So that might hurt. I mean, if you think of like a full quarter of FSD sales, that's a couple $100 million of revenue that will not be recognized now. Assuming it goes, like 5 months or something like that. And then the other thing that is probably more of a risk in my mind is the fact that this investigation is still ongoing, and NHTSA has used some language that like they're devoting a lot of resources to this investigation, and they're using novel legal techniques. And
that word novel legal, that was a little scary.
Yeah, that doesn't inspire confidence in me that this is a nothing burger. I've seen a lot of people when I brought this up in the past say, well, ultimately the data will win out and blah, blah, blah. And like, I think that's probably true. Like, I think it's definitely less than a 50% chance that like something serious comes where NHTSA has like let's say like a forced recall of FSD beta, and like you and I can't use it anymore until Tesla figures it out. And then if Tesla can't have it in the real world anymore, then progress slows on it, right? So like that's like that type of scenario would be awful. I think it's low risk, or I think it's low likelihood, but very high impact if something like that were to happen. So I think it's at least just worth keeping on the radar that something like that
on the radar
could be possible.
Yeah. I think NHTSA can make life more difficult for Tesla, but I don't think it can easily stop FSD completely. I think they can just like come up with more adjustments they require Tesla to do on the software, and Tesla would just have to keep updating its software based on what NHTSA is telling, which would be so annoying for Tesla. But I think the main, like 80% of the use or functionality or benefit of FSD would still be usable. All the highway driving and basic. So I think it would be hard for NHTSA in its power to like totally stop all of FSD software. This is really just like it's just driver assistance, advanced driver assistance. Every car has that. Like all the new cars have that already. Tesla's is just a little novel and unique in that it gets updated over the air and it's more advanced and such. So it would be very tough for NHTSA just to outlaw all advanced driver assistance. Maybe they could somehow create a lawsuit to force Tesla to rename it something else or something. I don't know. But I don't see NHTSA being able to stop it in its tracks. I think that would require like congressional legislation or something like that. But I think certain states could try to outlaw it somehow in those states, maybe, or some states will be more friendly. So it'll just, I think NHTSA it could continue to make life more difficult for Tesla with all the quote unquote recalls it might continue to issue over time. But that's my thought. But I think that's a risk too. I do think it's a risk because it could just get so ugly with PR and press, and especially when the first full self-driving beta accident happened that kills someone, it's caught on camera and like clearly evident, that'll just become national news headlines immediately, and who knows where that
Yeah.
goes with people like Dan O'Dowd like promoting that nasty accident to be reasons for outlawing it or something, and then the Congress votes on it or something. Who knows? That's what I worry about, is that kind of escalation of mass hysteria on not looking at statistics and safety statistics, but just looking at one anecdotal incident or something.
Yeah.
So let's move on. We're running out of time. Roblox earnings, we'll really run through the bullet points real quick. Liked Roblox earnings. The market liked it. There were strong bookings, stronger than expected bookings metrics. The daily active users and the total hours engaged was trending very well, especially for January, and especially for the older demographics, which is key for Roblox's long-term success, is to, continue to age up, which also means like the current users, as they grow older, they stick with it as opposed to graduating to other things. And then Roblox was very conservative. What we liked is they seemed very conservative on their advertising revenue projections, that we think in the rest of this year, the advertising revenue could come in better than they're kind of projecting. So we're excited kind of about that. But also what was really good about 2022 is Dave Bazuki on the call mentioned that they were basically cash flow positive. I think they lost like $18 million total or something, which is really small or de minimis for them. But they were basically cash flow positive for all of 2020, for the calendar year of 2022, which is incredible, at this growth stage to be cash flow positive, with everything going on. And then the biggest thing I think medium to long term that we're excited about is their kind of partnership model that they're building out, this self-service model where all the brands that want to be partnered with Roblox and build experiences on Roblox, it's going to be all self-service, and they're building this out. And I think this is the future where they provide the entire ecosystem of coding, all the stuff that if you're Coca-Cola, you want to build Polar Bear Coca-Cola World and Roblox for kids to play in, then you just have your Coca-Cola brand manager people hire some Roblox developers or whatever to go into Roblox and build the Coca-Cola experience. And Roblox doesn't have to do anything. It's just scalable. It's just part of Roblox's technology infrastructure that's out there for everyone to use, and so it's zero cost for Roblox to take on those extra partnerships in that way. And those partnerships obviously feed into Roblox's viewership, and there's immersive advertising revenue involved in that and such. So that's all part of the self-service model, like how much Coca-Cola wants to have immersive ads and the other Roblox experiences. They work with those Roblox developers. So Roblox itself, the company doesn't have to, it just provides the platform, and it's all like really automated. That's what I think is most exciting about the business model for Roblox growing to the next level, I think.
Yeah, the operating leverage potential is just massive here. I mean, if they, like, a lot of what they're building out right now is, stuff that will be, just very minimal kind of increases going forward in order to support, 2 or 3 times the audience that they have right now. They're not going to need to spend 2 or 3 times the amount of, O&M and, R&D. So, and I think in fact, some of those, like the R&D right now that they're spending to build like a lot of the new, characters that they've been developing. And even just like you said, like they're doing a lot of hand holding right now, whereas the plan is to get to 100% user generated content. So, I think the efficiency of the organization should increase drastically in the next year or two, assuming, revenue growth can kind of maintain on the track that it's been. We should start seeing, I think, that path to get to profitability, which is be really exciting.
Yeah. Now let's touch on Lemonade real quick, and we'll save 10 minutes for Q&A. We'll try to touch on Lemonade. You wanted to go over the bullet points of Lemonade, Matt, that we were liked?
Yeah, sure. So, Lemonade,
like
I think it was kind of interesting because it was almost like a tale of like the current quarter. Q4 was pretty phenomenal. I mean, pretty handy beats on the top line revenue, and then on the other side of the coin, like their earnings per share was like their loss was, I think it was around 30 cents better. I think the market was expecting like $1.27. They came in at a loss of around 90 something cents. So it was a really, really strong, beat on the actual metrics for that quarter. I think the biggest item was they saved around $10 million quarter over quarter on their advertising spend. So some pretty good discipline there. I think where the street got a little concerned potentially is the guidance was weaker than I think you might have expected. And it looks to me that they're probably sandbagging their numbers a little bit. In fact, Paper Bag Investor, kind of tweeted something to that effect. And Daniel Schreiber,
the CEO, Daniel Schreiber,
to his credit, the CEO, one of the co-founders, responded that, it's hard to forecast these things, and there's a lot of variables and blah blah blah. And my takeaway from that was kind of like, he is sandbagging. So there's I think the long-term thesis is definitely still intact. Looking forward, like I think the thing that was most encouraging to me was how much they got their costs under control. That was something I was not expecting anytime soon. So when I was updating my own, earnings model for Lemonade, the path to profitability became a lot more clear once you kind of saw the progress that they'd made. The loss ratio improvement was pretty significant as well, which is something that they've been saying that would happen eventually. So if we continue to see that tick in the right direction, that'll have a huge improvement as well. And then the last thing that I always harp on, it's like almost the core of the entire thesis, is just the possibility to have the in-force premium continue to expand. It's like 10x higher than that average US spending on insurance is about 10x higher than what Lemonade's average customer is paying. So as they start bundling, which they're like in the very, very early innings of, and as they roll out more of their products to all 50 states and to international markets, I think the in-force premium per customer is going to increase drastically. And at the same time, their customer count should be increasing somewhat significantly as well. So I think the combination of higher customers times a much higher in-force premium per customer should really transform the financials of the company. But just from the investing side, go ahead.
Yeah. I thought you were going to say what you're most excited about. That's from the fundamentals, was this potential for the squeeze. This squeeze,
that's what I was gonna,
squeezed lemonade, fresh squeeze
lemonade.
Yeah. That we see it's a binary outcome. If it's on the positive side, eventually there will be a squeeze of shorts. It's like very highly shorted. On that side of the binary outcome, the outcome is very prosperous for any kind of investor that's long, but on the downside, it could, be sold for, it could go down only so much, to zero, right? But the upside potential could be, 10x for the stock or something crazy if there's a short squeeze. It's exciting.
Yeah, it really is. I mean, it's so thinly traded, and it seemed to me like we might have seen the beginning of a short squeeze that day after earnings, where it jumped well over $18 a share and then quickly fell back down. So, it's just interesting. You don't want to base a full, kind of thesis on hoping that a short squeeze will happen. But it's definitely primed. Like there's gasoline doused all over the stock.
Yeah.
So,
gasoline.
something could
Yeah.
happen at some point that'll
All right.
take it off. Yeah, I gotta
Yeah.
shut my mouth now. We gotta move on to Q
No,
and
it's
A.
good. Let's do Q&A. We got like 7 minutes for Q&A. Let's try to touch as many as we can. From BJ23 Air on Twitter, do you think that any other companies will be involved at Tesla Investor Day, like Redwood Materials, for example? I don't think so. I mean, they might reference other companies they have partnerships with. Maybe Redwood Materials will be referenced even potentially, but like mining companies and rare earth materials, battery supply companies. But I don't think there'll be like any official, involvement. What do you think, Matt?
Yeah, I agree. I think at the battery day they had a couple mining company executives that were invited, so it wouldn't surprise me if there's something like that. But no, I don't think that there'll be like somebody highlighting
Yeah.
an Albemarle mine, for example, or something like that.
Yeah. Next question comes from Barbecued Veggies on Twitter. Besides Paper Bag and going live with Good Soil, what other good resources are there to learn about lemonade? There's not a lot of good resources. Like the Motley Fool has some articles, but I feel like the best resource is yourself, like researching it yourself with actually using the product and trying to talk to people that use the product. I've met some people that use the product. I can't use it myself. I've tried. For my address in California, they don't really offer homeowners insurance for much of California or any of it anymore, I guess. But I've talked to a number of people that use it. They like it. That's the best resource is yourself for a company like Lemonade, especially, which is so undercovered. But that's my thought. Matt, what do you say?
Yeah, there is a community on Twitter that's actually pretty good of a bunch of investors. I think there's like 219 people on there. So if anyone is interested in becoming part of that community, you need an invite. But so just shoot me a DM or something, and I can give you an invite.
Yeah. Next question from BI on YouTube comments. What PE multiple does Tesla deserve if Fed funds rate are closer to 3% over the next 3 to 5 years? Matt, I'll leave that to you. You're the multiple guy.
I'd have to do the math on that to really figure it out. But obviously, the lower the Fed funds rate goes, the higher the PE multiple, because you're essentially just lowering your discount rate. And so for a company whose earnings and cash flows are back heavy, having a lower discount rate really increases your present value of all those cash flows, which in turn increases your PE multiple. So I would think it's probably at least like a 20, maybe 15 to 20 turns improvement. So what are they trading around 50, I think, right now? So maybe if it drops down to 3, that'd be a 70, something like that. Seems maybe the order that we're talking about, but again, I'd have to do the actual math to check that out.
Next question from T. Nelly on YouTube comments. Why is Elon so concerned about population decline having a negative effect on future labor if he's confident bots will be doing all the repetitive, dangerous, remedial jobs in 20 years or less? That's more of like a philosophical question versus a investor question, I would say. I don't know. I mean, just it's kind of depressing to have a whole bunch of humans wearing diapers as we get older, as opposed to babies wearing diapers. If you if you continue that decline, it eventually turns to zero, right? So how do you reverse that someday? Like you just don't want to see that decline inevitably get smaller and smaller, where one day there's just a handful of humans left because no one's repopulating. I guess I don't know. That's my thought. Anything quick, Matt? We'll go to the next question. Yeah.
Yeah, I mean, I think the other thing is you can't just assume that you're going to solve this, problem with bots. I mean, a lot of people I've heard think that AGI is going to solve the climate crisis, but in my mind, you shouldn't just assume that you will do that, right? You might as well make progress on everything that using your own ingenuity while you still can, and then hopefully Deus ex machina, something comes in and solves it completely. But don't just put all your eggs in that one basket.
Yeah. Next question from Steven on YouTube. Question: how fast do you see Boring Company creating tunnels in major cities? Is this a 20-year horizon or something that will happen soon? I think it's gonna be a slow build out. The jurisdiction, municipal regulations, red tape. I know just building in California, they tried to make it so easy to build addressable dwelling units, like extra little houses on your property. And I was invested in a small company that was trying to do that. And just so much red tape for everything to build anything. A Boring Company tunnel, I think the idea is great. I just don't see in China. I see that happening much faster in China eventually. In the US, I just see too much red tape, and it's just going to slow things down. it could be a 50-year horizon before you see it everywhere, not 20 years. Maybe you see the first couple cities 10 years from now, like Las Vegas built out more, but then another 10 years for a couple other cities, and then 50 years before it's like widespread all over the country or something like that. Best case. That's my thought.
Yeah, I agree.
From Dan F on YouTube, Matt, with Cybertruck close to production in the current state of FSD, would you take delivery of all your orders?
Quick recap for those who maybe are not familiar. So several years ago, I reserved 21 Cybertrucks simply because you could get FSD locked in at the then current price, which I think was like $8,000 or $9,000. So my thinking was that reserving Cybertrucks was a free call option on autonomy. So my thinking is still the same. If they solve FSD, and like I think that these Cybertrucks can become like a fleet of robo-taxis that will generate income, then yes, I will take delivery. But right now, I definitely don't think that that's the case. So if I was forced to take delivery or cancel my orders, 6 months from now, I would say I most likely would cancel the orders. But it's a free option. I get all my money back. It didn't cost me anything.
Yeah. Last question. Let's do from Martin Muldoon. How you doing, Martin? What do you hope to hear on tonight's Rocket Lab conference call? Great question. Yeah, Rocket Lab, that's the other stock we follow. And, the way we position Rocket Lab is sort of like a much longer term venture capital investment, almost like you have to just, forget about the stock movement almost, and just like, look at what the business is doing and what the industry is, where the industry is going in 5 or 8 years, or when the space industry is much more mature and developed, where's Rocket Lab's place in that? And we believe it'll be in a very good place. But Matt, what do you think? Anything in the conference call or Rocket Lab you're looking forwards to?
Yeah, I mean, I definitely want to see like the costs are getting into control. They've been pretty disciplined about that, but I think that the bigger thing is some sort of confidence on launch cadence and backlog. I think that in Q3 we saw the backlog actually shrunk for the first time, at least that I can recall. So if they can show the backlog is actually expanding, I think that would put a lot of the concerns, because there was like a blackout window of around 2 months where we didn't hear anything about new launches or anything like that. So if they gave some sort of confidence on how many launches will be occurring in Q1 and beyond, and if the backlog actually grows, I think that would give me a huge amount of confidence.
Yeah. All right, guys, let's end it there. Again, this is recorded on Twitter Spaces and YouTube, our YouTube channel, so feel free to watch it later if you caught the first part. We'll see you next week after Investor Day. Big day tomorrow. We'll see where the stock goes. I'll see you guys later.